Hello, Stephan. Thank you for taking this opportunity to talk to us. You've just posted your interim results. Do you want to take us through the key features of this first 6 months?
Yeah. Hi, Fiona. Before I dive into these, what you call features, or sort of the drivers, I guess, that what you're expecting, I'd like to take just a quick step back in terms of laying out, what our growth strategy actually and business strategy looks like. So we like to talk about it in two axes. So on the one axis, it's all about the adoption process, right? And when we think about adoption, it's really developing the supply side. So in other words, the content owners to partner with us so that we can create inventory out of their content, which then is taken to the advertiser side, and the advertisers then buy the inventory, etc. And so think about it as an upward spiral, right? And that requires us to invest in people, smartness, some systems, etc., to get that business going. So that's the one side. The other one is really the pivot into the utter scale scenario, where ultimately the inventory is not sold in a manual fashion or semi-automated, but actually really made available in the programmatic space. Coming back to your question, the one thing we've decided 1.5 years ago, 2 years ago, is really to go very, very intensively into the US market, because at the time we weren't really represented in the US market at all. And as you know, the US is the biggest advertising market in the world, the most sophisticated, and so forth and so forth, the most valuable market, where actually the chances of succeeding are much, much greater. So what we did at the beginning of the year was really, after having prepared the ground last year with a very strong partnership with the tier 1 entertainment company and other 8 partnerships in the market, to really double down, if you will, on sales, right? So we invested in a sales force, outside sales force, and some internal personnel to really drive, the business forward and ultimately drive the revenue. And that is, to answer your question, sorry for the long tangent, is actually really the reason why we're seeing, this uptick. It's mainly driven by the US, where we're seeing, plus 300, don't nail me on the exact number, 300%, uptick in terms of the average deal sizes, and overall the revenue going up 300% as well. And so that is really the main cause, and that is the trajectory we're on. And if I may preempt, we're investing even more now into the United States, just to capitalize even further on that, on that momentum that we've gained. And so that's really the main reason why we're looking at a growth in the first half, despite, and no secret, I guess, despite the fact that we have encountered pretty difficult market conditions, right? I mean, the pandemic, let's make no mistake here, has put a lot of pressure on media budgets. And when there's pressure on media budgets, normally what happens, not only they're reduced, but eventually, people just, or the buyers don't go for the innovation, but go more for the safe bets and things that they're used to handle. So we have been really hit by that. So I'm actually really happy that despite this very difficult period, we have started to grow in the first half.
Now, there have been some delays with Tencent. Do you regard that effectively as just a timing issue?
Yeah, so the thing with Tencent, I need to explain that. So first of all, we are, Tencent Video is a formidable player, very, very advanced, if not one of the most advanced companies in terms of platform companies in the world. And as you know, we've had a 2-year contract in the past, right? And the model at the time was slightly different in terms of we were really taking to market the proposition on a show-by-show basis. So literally clients or advertisers would book into a show and so forth and so forth. And that model had one problem, I should say, or there's one exposure to, because in China, regulators at times take decisions and delay the releases of shows, or things like that happen. And so we have been exposed to this thing, and it has had an impact on actually how the business has been developing. And so what we then said with Tencent, we need to transition to a different model, which is what we call the audience-based buying, or proposition, right? And think of it now as not being show related, but an advertiser coming in and saying, I want to reach whatever 18 to 24-year-old in, you know, urban centers, whatever, I'm making this up now, and I want to have 300 million impressions, right? And so what will happen then is that we will spread that buy across multiple properties, right? It's completely independent, if you will, from the shows themselves. Of course, we will go for context, and as you know, we have a technology and a solution that does that very, very well. It's connected with Tencent via APIs, and so this is the proposition that will ultimately deliver more scale, and it's our entry into the programmatic space. And I'm looking at the development with Tencent really as the blueprint that will take over to the world. Now, that being said, there's been a delay in launching this, so now, as things stand today, on the 28th of September, we'll be going out with the first campaigns in that new model. And then, you know, from then on, obviously things will evolve, and we're putting pressure in terms of sales, not pressure, but basically energy into the sales development. But there's been a delay there too. So in a mix of, you know, shows being canceled, etc., from the old model, which we're still working into, but then also the delay of the new proposition, that really explains why, from a timing perspective, there's just a little bit of a push, you know, backwards.
But you remain confident overall, do you, on the size of the total addressable market?
Yeah, 100%. Actually, more than ever, frankly, because as we've seen in the last, you know, 1.5 years, a few phenomena have become even more prevalent and more sort of putting pressure on advertisers. So the one thing obviously looming in 2023 is like the kind of the disappearance of the third-party cookie. We'll find ourselves in a world where, you know, we will have 20, 30, 40 walled gardens. And I think the connective layer above that, from a targeting and audience building standpoint, will be context. And we are at the epicenter of that. So if you want to target people in the right and a relevant manner, you will have to leverage context. So that's where we are, right? The second thing is really that you know, when you think about reach and how to reach people between you know, viewers going into streaming services or switching on their ad blockers, there's many reasons, or just not watching the ads, right, because they're annoying or whatever. There's a huge problem, and as you know, we go into the content itself, high relevance, and we can't be blocked, etc., etc. So I think, you know, the reason to be for us, the opportunity as such, is greater than ever, and it will become even bigger. And so now we look at this gigantic media market or media spend in terms of over 600 billion a year. You break it down into television and video spend, you know, 145 billion a year between China, France, Germany, UK, and of course the United States, which by the way is 3.5 times bigger than China in terms of spending. And so what we just say is like, okay, that's 145 billion. If we capture 1% of that business or of that volume, that TAM, that's what we regard as the TAM, then and take our share out of that, we have a very, very interesting business. And you ask me, you know, how confident are you? But frankly, I have 0.00% doubts that this will happen, because the solution is just so needed and it is so relevant in today's world from all stakeholders' standpoint, right? The viewers have a much better experience, advertisers get much better results, right? And we know this out of research, many researchers, and ultimately whoever owns content has a new monetization opportunity, you know, at no extra cost, because the investment into the content has already happened. So yeah, very, very confident.
Good. Thank you very much, Stephan.
Thank you, Fiona.